We've come completely 180 degrees from where we were back in September when the Fed was talking about a more aggressive need for, or a need for more aggressive monetary posture and more rate hikes. So we've come full circle. The market is now anticipating positive things. If we don't get that, that could be a disappointment. And the broad trends in the data to us still seem fairly negative. So we're sitting on the sidelines here a little bit cautious at Washington Crossing Advisors.
Steve, meantime, I wonder if one of the most significant events of the week in retrospect will be Mester's comments about the balance sheet. Is the fact that she as a hawk sounds kind of dovish on that yesterday going to overshadow what we learned today about a meeting that happened a couple weeks ago?
No, Kelly, I mean, the whole Federal Reserve has moved inside this circle that I drew a couple weeks ago. And that circle is we're going to be patient. They're on different sides of the circle. In other words, some lean a little bit towards, I'll be patient for a while, but I really want to hike. And some are, I'll be patient for a while, but I really want to cut. But everybody is sort of on board the same thing. And we found that with Mester not only this week, but a couple weeks ago when she came out. Esther George as well, another hawk on the board, was in the I'm fine being patient here. And I think that's okay because the inflation numbers are kind of quiescent right now. We got to work through this oil deflation or disinflation that's been in the system for a little bit and see what it looks like on the other side.
And Kevin, what do you think is more important? Would it be that the Fed says, well, you know, like we heard a little bit of this from Mester again yesterday, maybe a rate hike or two is on the table depending on trends. Would that be more important? Or would it be if they are flexible about the balance sheet? What's the more significant turn for you? Kevin, sorry,
I'm not as worried about the balance sheet because of on the fiscal policy side, we're seeing a expansion of fiscal policy and a run up and an increase in federal debt. So I'm not as concerned about the balance sheet. The interest rates, though, do concern me a little bit because what you've got now are positive interest rates that are moving higher and potentially encroaching upon the expected return range for things like equities or riskier assets in general. So if we got a much more aggressive Fed where a risk-free rate went up, let's say 100 basis points or 200 basis points, that would put some pressure on where assets get deployed, either into stocks, which we think are going to have relatively low long-run returns, or save cash. Yes.
Kevin, what if that came, for example, with still 3% growth? I remember we were in the 3.25% range, 3.5% range, and really the market was not spooked by it because it had the stronger GDP growth, it had the falling unemployment rate, the Fed was hiking, and everybody was chill about it until all of a sudden growth off. I'm actually praying for more rate hikes, if you really want to know, because if there's more rate hikes, it means inflation's firm, it means GDP's back, it means unemployment's falling. I don't think that I'm hoping for no rate hikes because of what comes with that.
Yeah, of course, as equity investors, we would always want to see growth, but at the moment, globally, that's not what we're seeing. We're seeing global growth fading away. We've got, over the last few months, we've seen a weakening of activity in China, a weakening of activity in Europe, and even here, you're starting to see it in things like automobile sales, softening in housing, retail sales last week were not so good, and the expected growth rate in the economy now, I think, is below what we would expect to be trend line. So we're thinking 2.5% trend line, and we're thinking probably below that, at least in the first quarter.
Okay.
So we would like to see a faster economy with the Fed being able to raise interest rates. That can work, but right now we have a slowing situation that has to get over first.